Hey guys, so let's hop in and learn about how to combine fibs with support and resistance. Now, Fibonacci levels can be very subjective. However, there are ways you can help tilt the odds in your favor. So what I'm going to do is show you how the Fibonacci retracement tool, for example, is very useful, especially when you see some type of impulse on your chart, a very forceful move. And I'm going to show you that from the daily, but I'm going to do a top-down analysis because we need to identify our support and resistance first, and we're going to start out doing that on the monthly. Now, you might be questioning, well, Kenya, why are you starting on the monthly time frame? The higher time frame overrules, okay? It is the most powerful indication of what could happen on the lower time frame because you get a better perspective of the higher time frame. And a lot of traders don't understand this. They start on the lower time frames thinking that that is the best thing to do, but you actually should do the opposite. So let's take a look at this monthly. And one of the things that you will notice is that it's been in a downtrend. So here is our high, here is our low, here is our lower high, okay, because this lower high is lower than the previous high. And now we want to just continue down. I'm just going to go ahead and drop down. I'm always looking for swing lows and swing highs, okay? So something that sticks out to my naked eye. And now I have a high here. So I actually could have done something like this. I have a lower high here. I do have a low here that actually kind of aligns with that previous support right here from back in February of 2020. Okay, and then notice we went and created a high that aligns with our previous support from back in May of 2021. The market provided a rejection to the downside. We then got a new low here in August of 2022, and then we went back and retested our previous monthly structure right here at the 1.4600 zone. So this is acting as our current monthly high. Okay, so that is the structure. So now that we're clear on that, we can go ahead and identify our support and resistance. And you can see right now that our monthly high is a really good structure level right here where the price acted as support and resistance multiple times. So in this area, we simply can see that the market was very strong support back in August and July of 2017, and look how much it pushed to the upside. It was also support, as we pointed out, resistance and resistance. So that's really powerful. And after these two strong bullish candles going into a monthly reversal zone, it only makes sense that it would reverse from that area. So now that we know that, we're going to keep our eye on this level because currently price is right below it, rejecting off of the monthly. And if we continue to go down to the weekly, wow, look at that. What a beautiful confirmation. So look on this weekly time frame. Now we're quite bullish on the weekly, I would say, because if you look left, you can kind of see here that you had a high here, you had a low, you had a high, you had a low, and then we broke the weekly structure right within this zone and continued to push up, okay? But from a monthly perspective, we still are pretty bearish. So some people might say that I can even use my 50 period moving average, and you can see prices trading above my 50 period moving average. Okay. So now that I know that, I'm just going to delete that. So look how I'm building a story as I use multiple time frame analysis to kind of drill down. So this is our area of monthly high, which is also our weekly high. And this is a very strong turning point. And because we know that, we possibly want to trade from this area. Now we can also spot out if I take a short possibly from this zone on the lower time frame, where should I take profit? So if I clone this and just bring it here, now you can see that this is currently my weekly support, and it was also previous weekly support. It was also resistance, and now I'm going to keep drilling down. So now that I'm on the daily, now price kind of looks sideways, right? Kind of looks sideways here. You can clearly see that we had an uptrend and it kind of looks sideways. But one of the things that I do see, if I kind of stretch this out, I can see that I do have an area where the market is making lower highs and lower lows. So look at this. We have rejection off of this zone. So we have a high. This was telling me that in this uptrend, you know what? Buyers are losing steam. Sellers are possibly going to come in and push that price down. And look, that's exactly what they did. So here's a high, here's a low, here's our lower high, here is our lower low, and now here is our high, which also is reacting with a previous low. Okay. So this is a reversal zone that we definitely want to keep our eye on. So one of the things that I want you to notice here is I want you to see we have a bearish impulse. So because the market is making lower highs and lower lows right within this area, although we overall are kind of sideways right now, one of the things that you can do is focus on this impulse. So when you use the Fibonacci retracement tool, you are looking for an impulse, and this would be an impulse on your chart. You're looking for some type of wave or a very forceful move on your chart that moved from one area to another. And what you will want to do, I'm in TradingView, so I'm simply going to click. My Fibonacci tool is under the third icon here. So 1, 2, 3. And if I click on it, it's already selected on the Fibonacci retracement because I use it quite a bit. So I have it as a star. And one of the things I want you to see right now is that I am not using Fibonacci retracement to help me get into this trade. I'm using it to build more confluence, more additional confirmation as to why I may want to enter. Or if I know that, you know what, the market has fallen from this area quite a bit and look where it stopped, look left. It stopped at this very strong reversal zone that was previous support back in January of 2023. So if I buy off of this level, where does it make sense for me to take profit where the market will possibly continue to the downside? We marked our major support from the higher time frame. So this is our support. We have our resistance, and now we know we have an impulse. So in a downtrend, or when you have a bearish impulse, for example, the market is moving to the downside, what you want to do is you want to take your Fibonacci retracement tool. So I'm going to click on it, and you're going to measure from the high of the impulse, okay, from the high of the impulse, and you're going to drag it to the low of the impulse. So I'm dragging it to the low, and I'm simply going to let it go. Now you'll notice that there's some numbers here on my Fibonacci retracement tool. Let me make this a little bit bigger. So there's some numbers here on this Fibonacci retracement tool. And I'm not going to dig deep into the numbers. We actually have another video on that, and we go into this in the Academy very in detail. But the magic spot, the key spot, is always the 618% and the 50% fib. Now, when I'm trading a counter trend, for example, I always like to take profit at the 23% fib level, okay? But in terms of combining this with support and resistance, one of the things that I want you to see right now in this daily structure, even if I remove, so price is quite far from that resistance zone up there, I'm going to go ahead and remove it. And then this would be a major support level that I would keep. But if I'm looking for a potential entry in this downward trending structure right now, just on the daily, I'm going to find my next level. Okay, so this would be more of a minor level here on the daily, but it was a great level where the market provided quite a bit of a force in one direction or the other. So if I measure, for example, from this support at 1.4363, and if I measure to the upside, it went about 100 pips to the upside to another reversal zone. So what I'm going to do is look at this fib retracement, and I'm going to look at the 618 and the 50% fib. Okay, now the fib levels are already support and resistance levels. So basically you're combining them with price areas that a lot of other traders are watching, and then the chances of price bouncing from those areas are higher. So that's how we want to use this. So all I'm going to do is I'm going to clone this zone here, and I'm going to bring it to my area of structure where it is also the 50% or the 618. So you can see right where the 618% fib is. I'm going to remove it. Look where the market is bouncing from that area. So if I was going to short this zone, I would be looking to enter somewhere within this area where the market rejected before. So look, this is previous support, it was previous resistance, it was also previous resistance, and look where it rejected right here at 1.4387. So I always pay attention to the wicks, not the body of the candle, because usually the wick area is where the market will go to retest that area. So if I were going to get in this trade looking at this zone, I'm going to look at this zone and say, okay, I know that we had a bearish impulse. We now have a correction, which is also giving us a flag formation on the daily. Okay, so logically, we might just get a continuation back to the downside or a bearish flag breakout back into this support zone, right? That's one thing that can happen. Now, of course, we know it could push higher. If it goes beyond the 618 fib level, like higher than that, then that's an indication that the market could continue higher. But if we're rejecting off the 618 fib, and you know that this is a reversal zone where it was very strong support, it was strong resistance, and look here, we can even look here. Look how much the market moved from this area. Let's measure. So from here, these bottom wicks, and if we just measure to the high, it went 157 pips to the upside. That's powerful. So this is a very significant level that we'd want to trade from. But one thing I want you to notice is when you're determining your entry, you want to pay attention to what's happening within the zone. And this is why you want your support and resistance zone to capture a nice area of the wicks where the market reversed multiple times, because I know, look what happened here. Now, I could have said, okay, I might watch for an entry right here where it was previous resistance. The market wicked just above it a little bit. But I know a lot of other traders are watching this level too. So I have to be careful, because if I do too tight of a stop loss, I might get prematurely wicked out. So what you could do is set a limit order, maybe right in the middle of the zone, because you know that this is where it reversed from previously. But I'd also be keeping my eye on this wick area right here, looking left a little bit more and seeing that I had a few wick or highs here as well. So the market could just wick off that area to continue to the downside. And look what happened. It wicked right here at 1.4394, and it's starting to push downward. Okay, so I just wanted to do a quick video and show you guys how to combine fibs with support and resistance. Again, this is all subjective because all traders draw their support and resistance very different. I know there are some people who are not even comfortable using fibs, so it just really depends on where you are in your journey. But I definitely want you to understand how to use it and the opportunities that you can have and how it can help you see or have additional confluence for entering a trade. Remember that trading is all about probabilities. So if you stick to those higher probability trades, then there's a better chance of coming out ahead in the long run. You have to document what you're doing. You have to analyze the data from previous trades to determine what's working and what's not. And when you start to do that, then you will start to improve your edge. Guys, I hope that this video helped you. Comment below and let me know what questions you have. Make sure you are subscribed and you have that notification bell turned on. And if you are a new or struggling trader, check out our academy below in the description and other great stuff that we offer, and also our free public Telegram and Discord. I will see you guys in the next video. God bless you, and thank you so much for watching.